Hey, do you want to know what the number one cash flow killer is? Something that's going to make it so that you are not near as wealthy as you projected yourself to be. It's a common issue among real estate investors. The number one cash flow killer, property management and their fees. Now, before I go after property managers, I have to let you know, property management is one of the most essential pieces to wealth building. If passive income greater than your monthly expenses is the formula for wealth, then you've got to be able to continue to manage that property and collect rent, collect residual monthly cash flow on a consistent basis. And the one piece that is typically between a property owner, a real estate investor, and their money is that property manager, the person in the middle, the person who's dealing with the tenants, that's dealing with maintenance. And a lot of investors tend to outsource the care of their property to a property management company for the very reason of avoiding tenants, not having to deal with them, not wanting to develop a bond and a relationship with the tenant that you're then gonna have to evict on. It's a very awkward situation, trust me. Also, they don't wanna have to deal with maintenance. You know, we know the day that the furnace is gonna go out. It's gonna be December 25th at 6 o'clock in the morning, Christmas morning. That's when that furnace is gonna go out and you're gonna get a call and somebody's gonna have some kind of issue that you've got to deal with. And so a lot of investors outsource the management of their properties, but this video is dedicated to exposing all the additional fees that you may or may not know you're receiving in working with the property management company. The reason we've got to expose this is so that you understand what's happening to your cash flow and therefore your wealth building. If you know what the fees are, you can then make an educated guess as to how much it's actually going to cost outside of the rent that you're going to collect to work with this property management company or any other property management company. In the book, Freakonomics, we find out that a typical motivator is money. And so following the money will lead to the reasons behind why people do what they do. And so we're going to apply the same principle as we analyze property managers and their fees. So the typical scenario when an investor starts getting involved with a property management company is to ask them about their management fees. The average management fee across the country is, let's just say 10%. In areas where I do deals in, pretty much the middle of America, where rent is on average $1,000 a month, if a property management company quotes me that they're gonna manage my property at 8%, that means that out of that $1,000 rent, they are only gonna get $80. So then the question has to be asked, how many doors do they have to not only meet their overhead, but actually make a profit? After all, they're in business to make a profit. Can they do it with $80 a month? Even $100 a month? When you first interview a property management company, you really need to ask how many doors that they have and how many employees they have. And if that ratio is too high, they're just simply going to find other ways to bill you, other fees to get from you in order to meet their overhead and to make a profit. So the very first fee you have to worry about with a property management company is the lease-up fee. Sometimes it's called a marketing fee or a finder's fee, but it's the fee that you pay for a property management company to market and find and secure and close a tenant. Sometimes that fee is a flat fee, could be $500. Sometimes it's half of the first month's rent. Sometimes it's the entire first month's rent, but typically when a property management company secures a tenant, they're going to get paid for that. And so you just need to be aware of what that number is. So the first fee is the lease-up fee. The second fee is the management fee. Could be 8%, could be 10%, could be 12%, it could be 15%. It just depends on how the property management company has structured their business. And these two fees are typically what gets discussed when you are, as an investor, interviewing a property management company. The other fees I'm talking about are going to be hidden fees, and these are the ones you got to watch out for so that you don't have a hit to your cash flow that you're not expecting. The third fee is the maintenance upcharge. The scenario is that the tenant has a maintenance issue. They call the property management company. The property management company hires a contractor to go actually do the work. Once the work is finished, a bill comes to the property management company, and this is where there could be an upcharge. The property management company takes 10% of whatever that bill is, but they take it out of the rent that you are supposed to receive as an investor. Another way to do it is to be fully disclosed and to add a charge on top of the maintenance. You may have a bill for $500 and they add $250 to it for handling that situation. That's not included in the management fee. Sometimes they have their in-house maintenance crews, and they will just have a flat fee that they charge to the investor, and then also a flat fee that they pay to the contractor. So the third fee, the maintenance fee, could be a hidden fee if the property management company doesn't disclose it. To combat that, you as the investor need to ask those questions. And the questions need to be something like, do you upcharge for maintenance? If so, what do you upcharge for maintenance? Is it a percentage? Is it a flat fee? Because most investors wrongly assume that the management fee includes handling all the maintenance. Most property management companies have some kind of agreement, either with the contractor or with the investor, to get paid on that transaction. So far we've gone over 3 fees: the lease-up fee, the management fee, the maintenance upcharge, but the fourth fee is the one that drives me the most crazy. This is the renewal fee. When a property management company finds a tenant, leases the property to them for a year. After that year is up, if they've been able to convince that tenant to stay and renew that lease, the property management company will get a fee for that, sometimes as much as $250. Now, the reason this is an issue for me is the purpose of a property management company, in my eyes, is to find a tenant that's going to stay in my house long term. Well, that's why they got the lease-up fee to begin with. Why are we getting the renewal fee on the back end as well? That's what really gets to me, is getting charged twice for the exact same task. The justification for it is, hey, it's a kind of a bonus or a tip for us doing a good job. Well, I look at it, the bonus or the tip was the first time you got paid on this, and the fact that you've been getting paid every single month. Be cautious for those renewal fees. Make sure you understand that, because a lot of times it's written into that management agreement and you don't even see it until that 13th month when that tenant makes that payment. All of a sudden it's shorter to you. That renewal fee is a real thing that could significantly affect your cash flow. And the fifth and final fee is a rehab fee. This fee is when the tenant moves out of the property. They got to do a make ready, get the property ready for the next tenant. Everything from getting the grass cut, changing over the utilities, and then the actual rehab. What they'll do is get a quote for that make ready. We're going to add a fee on top of it because it's outside of our normal scope of managing property. That's the biggest fee that they get, because you've just had a tenant move out. They've not left it in the greatest of shape. It's when you as an investor in your most vulnerable position, particularly if you have a note against this property. You still got to pay the bank even though the property is vacant. You're kind of stuck. You are reliant on this property management company to get this property ready to rent. They need to account for it in your vacancy. Remember, we talk about taxes, insurance, management, maintenance, and vacancy. Vacancy is when the property goes vacant. Do you have enough money to keep it going? So this is kind of a bonus sixth fee that gets charged, and that's the late fee. When a tenant is late on their payment, property management company will just apply a late fee to them. If the tenant winds up paying it, property management companies typically keep that late fee as a charge for having to deal with extra work on this thing. If you start actually doing the math and accounting for all the fees that you wind up paying to your property management company, fees that you know of and fees that you don't know of, ones that are disclosed and ones that are kind of hidden, you'll begin to realize that they're getting paid on your property to manage it a lot more than what they originally quoted you, that 10, 12, 8%, whatever it might be. So it's just something to be aware of and make sure that you're adding it into your calculation. Now, the solution that I have found, which is the best solution, is to get a manager who's on your side of the table. You see, all the people that we deal with, we're on their side of the table. We want the exact same thing. We want cash flow for a long time. We don't upcharge anything because we're partners. We're doing the deals together. We have the exact same motivation. We want this property to perform because we don't get paid unless it performs, because we're partners on the deal. So that's the way that we've kind of remedied the whole issue with property management companies. Now, if you do decide to go with a property management company, make sure that you're managing the managers. Many people, particularly out-of-state investors, believe that the property management company will just make all the decisions for you and that you just have to pay it. And it's not true. You need to make sure that you understand what's being done to your property, how much it's going to cost before you agree to it. You're the one who gets to make the decisions on your investment. You are taking the control of your cash flow in your own hands. You want to be able to say confidently that my passive income is X so that it fits into my wealth formula. Passive income larger than your monthly expenses, and you know month in, month out that you're getting that cash flow. Don't let your cash flow get killed by property management companies and you not asking the correct questions. But the best solution is to get a manager that you have partnered together, that both of you are rowing in the right direction. You have the correct synergy with the objectives of that investment. So to summarize this video, number one, know the fees your property management company is going to charge you. Number two, be willing to manage the manager. And if you're unwilling to do that, my recommendation is partner with someone that's going to be on your side of the table representing your best interests. It's the kind of thing we do with our partners and investors all day, every day. So thanks for watching this video. Please like, subscribe, and I'll catch you on the next one.